Hey, welcome back. In today's episode, I'm going to give you the latest on the CBDC front in terms of how it's faring itself with its rival, which are stablecoins, and also in particular digital euro, which is really the other leading digital fiat currency in competition with its rival, the digital dollar, which is Tether and Circle. And then I'm going to give you a comparison chart and status of CBDCs at a global scale, just to give you some insights on the level of adoption that we are seeing on the CBDC front. So what is the digital euro, as it says here? It's basically an electronic version of the physical euro, which is fundamentally issued and backed, in this case, by the European Central Bank, the ECB. It's actually been designed to complement the cash and cards that we're familiar with, where it can be stored in a digital wallet and used for those borderless payments or even transfers. Unlike commercial bank money, on the other hand, digital euros would be held directly by the ECB, making them secure and not subject to lending risk. Now, this article in the title at the very top starts out saying the digital euro has actually enraged half of Brussels. Why they're fuming? The banks and centre-right politicians are alarmed. And why is that? It's because they fear they could potentially lose control over digital payments. They can even incur additional cost burdens for laying out this infrastructure for the digital euro, and also concerns of privacy over government surveillance. Industry critics calling it a solution looking for a problem, and how it would compete with the Trump's Genius Act, which is the US crypto regulation legislating and governing the issuance of the actual Tether and Circle stablecoins. And you also have to compound this on the growing anxiety and geopolitical tension that we are seeing. The ECB is concerned and worried about dependence on the US payment giants like Visa and MasterCard, and even those tech firms that make them happen like Meta, Apple Pay and X. So that is the concern. These are the reasons why half of Brussels are completely infumed by this situation. And how is this different with what the US have done, which is they've completely taken an opposite view with the Europeans, in the sense that they completely banned the idea of having their own US CBDC by way of legislating and approving, as we know, this US Genius Act, which legitimizes the private issuing firms like Tether and Circle to actually issue digital US stablecoins on rails. Right. So what is the fundamental difference, you may be asking, between CBDCs on the one hand versus stablecoins on the other? Well, as I explained earlier on, CBDCs as digital euro is fundamentally controlled and issued by the central bank, in this case the ECB, whereas with stablecoins, the fiat currency to which it is pegged is not issued by the Fed in this case in the US, it's actually issued by the private issuing firms like Tether and Circle. But since they're both, the CBDCs and stablecoins, are pegged at the end of the day by the underlying physical fiat currency, whether it's the dollar or the euro, for me there are still the same counterparty risk. Who is actually controlling the actual underlying physical fiat currency? It's the Fed and the ECB, regardless of how it's been issued. And this is all the more reason why I keep alerting this difference to those investors out there, because I'm hearing that they want to use it as an investment vehicle. No, these are only meant to be used as a medium of exchange to make cross-borderless payments on rails, not as an investment vehicle to make money out of. For me, that is ultimately Bitcoin. So stablecoins do serve a purpose. They do have a certain utility value for governing and managing cross-borderless payments at a fraction of a cost, which is very different from how we currently do it in the SWIFT system, let's say, right, where it takes several days and it takes quite a few dollars to cover the fee, right? Usually 2 to 3% if you're dealing with Visa or MasterCard like SWIFT payment systems, or even bank to bank, right? So they do have a utility value, stable coins, but not to be treated, as I said before, as a long-term hedge. And really, where is the proposal at? Basically, there is no direction on how or where the digital euro is going to come about. It's currently as I said before, it's not a stable coin. It's still continuing its journey as a CBDC to be controlled and issued exclusively by the central bank in Europe, the ECB, and not by any private issuing firms, and at least not the commercial banking lenders out there. So the view of the digital euro has not changed. It's still in its infancy. If you go back to this other chart that I'm going to show you, if you look at on the global adoption of CBDCs, unfortunately we are still seeing 49 countries in green that are still piloting the idea of their own national central bank digital currency. Mostly in South America, so you've got Brazil, fundamentally you've got in Western Europe, in fact the whole of Europe are exploring and piloting the idea of pursuing their own CBDC currency. So that is as a pilot. There's 20 that is in development, and you've got them listed here in Africa and in different parts of South America. Canada is also exploring that idea. So that's why, there's only 20 in development. There's 36 that are in research mode, which is, again, throughout Africa and maybe Pakistan. And if you can hover, it's quite a useful resource. It's called atlanticcouncil.org/CBDC tracker. But the rest are in inactive, in cancelled status, so they're not going to pursue the CBDC. 3 has actually been launched. It's mostly in Nigeria, the Bahamas and the Caribbean, and Jamaica. Those are the only 3 countries who have actually implemented and rolled out their own CBDC currency in those territories, whilst the rest, half of which are still in research development mode, whereas the rest have decided to, just cancel it and just withdraw that CBDC, right? So a very useful resource. I encourage you to tap into it and every now and then just see what's the upshot status of that. Now, just a short break as a reminder, if you're finding this episode adding value, make sure notifications are enabled. We cover Bitcoin, blockchain technology, and real world assets without the noise and the hype. So stay informed and stay ahead. Now, let's get back into today's episode of that. Now, the other more interesting chart I'd like to show you, whilst this heated debate has taken place in Brussels on the resurgence of the digital euro CBDC experiment or proposal, we have another interesting resource called RWA.xyz. And if you look into the stablecoins market, let me just go back up to the very beginning. I'm going to click on Markets Overview, and you can see that the total global stablecoin market cap, or total value locked, which is the equivalent market cap in the blockchain space, is currently, this is on-chain data, almost $285 billion worth of total stablecoin market cap value on-chain. And if I click on stablecoins, you can see it gives me the actual makeup of that 285 billion, right, market cap in terms of the private issuing stablecoins. Now you can see it's predominantly US stablecoins. Tether is the lead of the pack, and you can see if I just hover on it, it represents 155 billion out of the 285, followed by Circle or USDC. That's USDC is Circle. That is second place. That's almost $60.5 billion. And then you've got the rest of the other denominated US stablecoins trailing in the rest of the 285 billion space. So you can see that there is really, in fact, there is one called EURC. That's pretty much the only one that I can see that is trying to roll out a kind of a euro stablecoin, but it's very, very small, and I don't know which company or private issuing stablecoin company that issues EURC, but it's an EU. It seems to me an EU stablecoin. That's pretty much the only one on the list, whilst the majority you can see here is mostly pegged to the underlying US dollar, right? So that is the actual current status. It's predominantly 99% US stablecoins issued by these private issuing firms, governed by the US Genius Act in the United States, that's been recently approved. And we have the digital euro, which is still without its heads or legs. It's still going on. It's still being discussed, as I said before, in which direction they'd like to pursue the proposal of the digital euro, CBDC, central bank digital currency. That is the latest update on the debacle, as I said before, on the latest of digital euro. It's enraged, as I said, the half of the Euro Parliament in Brussels. I've given you the explanation of the differences between what is a CBDC and a stablecoin, because I think people are still confused about it. I already clarified the difference, but nonetheless, the common denominator is it's pegged to the underlying fiat currency, and that is exclusively controlled by the central bank in the region, right? And that's all the more reason why you should use it as a medium of exchange rather than as a long-term store of value like Bitcoin. Right? I just want to make that clear and use it as a medium of exchange to make those borderless payments on the digital rails system. And I wouldn't be at all surprised that on the one hand, we're going to be seeing the stablecoins growing exponentially rather than the idea of a CBDC taking off. I would see the CBDCs dwindling to zero at some point, maybe not in the short term, but certainly into the medium long term is going to be a thing of the past. And they're going to be superseded and replaced by the emergence of these stablecoins, because $285 billion global stablecoin market cap is not going to go away. It's going to continue to grow. And once it reaches that first $1 trillion market cap milestone, which it will, maybe not by the end of this year, but certainly by the end of next, then it's going to be very, very difficult to actually, for the CBDCs to compete with stablecoins, because that would be the ultimate king of all fiat currencies on the digital rail system. So that's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.